Hello and welcome to this Mutual Fund Corner special. Today we're going to talk you through the hybrid fund category. Now this space saw a huge jump in flows in the month of July. We saw over 12,000 crores coming into this space. So should you really include a hybrid fund in your portfolio? What is the benefit of picking such a fund? And is this, really a good way to add debt considering that the big tax changes have been put into place and that entire indexation benefit has been taken away? So to discuss this and more, I have with me Amit Kukreja. He's a registered investment advisor and founder of AmitKukreja.com. He joins me on the show now. Amit, thank you very much for taking out the time to speak to me today. This is our first conversation. So, thank you for being with us. And I want to begin with exactly that, right? The flows that we saw in July was significantly higher than what we've seen in the past couple of months, and this is even after the debt tax rules were changed. So what do you think led to such a big jump in flows, and do you expect it to sustain?
Yeah, so Pavitra, I think three factors contributed to it. So one is an obvious one, the change in the taxes which were rolled out as a tax amendment in the end of the month of March. The couple of other things are this whole awareness of mutual funds is picking up radically. And the third one is that this whole equity market, the upside of the market that you have been witnessing for last few months is also making people think about investing in the equity funds. And what better way to start investing in equity funds than to start in balanced funds? So I think there were 3-4 factors intertwined together that could have led to this massive inflow of money in the mutual funds and in the hybrid funds category.
Okay, got that. Getting a little bit more into the tax changes that we saw for debt funds, do you think because that is taken away, hybrids now become the most sort of beneficial way to get this kind of exposure? Is that what you would recommend as well?
I think it's written on the wall. The money will move from debt funds into hybrid funds because hybrid fund not only gives you a protection side because of the exposure to the fixed income assets, but they also give you the alpha because of the exposure to the equity assets. So you will see the shift happening. You will see a lot of learning curve also here because the taxation side is still gray. As long as there is clarity at around 65% or more into equity and its derivative investments, it's equity taxation. Otherwise, there is a category which will have indexation benefit, and there is a clear-cut category which will not have indexation benefit, unlike what it used to be for March 31st.
Okay, I'm going to come back to that and we'll talk more about that in just a bit. But Amit, from an investor's point of view, say that there's someone a little bit young, new to the markets looking at this space. How would you really say that a hybrid fund fits into their portfolio? Why would you tell them to take this route of getting into, different asset classes?
Yes, it is damn confusing for a fresh investor to start investing money in the mutual fund space because there are so many categories. But for somebody who is new to investing in mutual fund space and who is keen to go through the experience of investing in equity markets, the hybrid fund category is the best category to begin with. And if it's a DIY investor, who does it all by himself, he can try investing systematically on a monthly basis or try investing as a lump sum into a specific category of funds. This could be balanced hybrid fund. This could be dynamic asset allocation fund where there is an exposure to equity market, or this could even be a conservative balanced fund where there is an exposure to a lesser exposure to the equity market through equity stocks. To get that experience, the person has this category to begin his investments journey. And given the choice is humongous, this could be a smaller category of funds where the investor can choose from and eliminate his confusion and start his investing journey.
Okay, so this could be perhaps a good, one of your first funds to look at. Amit, but there are two ways you could go about this, right? I mean, either you look at a hybrid fund or you try to create a hybrid portfolio yourself by looking at some equity, some debt as well. What is the real benefit of choosing a hybrid fund? Is it largely, just the ease of it, the fact that you don't have to sit and rebalance your portfolio all the time?
Definitely ease is a function for somebody who is doing it by himself. So if somebody is new, somebody doesn't want to explore all the other categories of equity investments and fixed income asset classes or debt investments, hybrid creates a wonderful opportunity and convenience for that person. But, I want to just bring out a point. If you remember, the insurance products used to club investments in it, and they would say you will have a sum assured as well as a returns on your invested money. And those returns were not very impressive, and the sum assured figure was also not very impressive. Similarly, hybrid fund is going to be a combination product of capital protection as well as return kicker. But if you are a wise investor, a savvy investor, and you have gone through the journey of investments, you will most likely choose a combination of fixed income assets and the pure equity categories of mutual fund schemes like flexi cap or a multi cap or a large cap or a mid cap or a small cap or a large and mid cap. A wise investor or a savvy investor will choose two separate categories. One for short-term goal, that could be a equity oriented, but more on the capital protection side, like debt, like arbitrage funds. And the other can be a pure combination, pure equity fund. So it's a journey. You will evolve only with experience. So get started with hybrid. And then as you mature, you can start segregating and get into pure equity oriented schemes.
Oh, absolutely. And this is a conversation I was having very recently with another guest on the show, where even if you are trying to create an extremely aggressive portfolio, there is still, a space to add fixed income. So this is the question that we get from our viewers very often as well, that if I'm young, if I'm relatively, looking for the longer term, do I still need to add debt? And I guess the answer to that is pretty clear. But Amit, even within this space, there are seven different types of funds, right? 7 different types of hybrid funds. Could you take us through the debt to equity split, and say someone is a retail investor, long term, just wants a little bit of exposure to, the different categories. What is the category that you would recommend within this?
Sure. So for people who are listening to us, I must call out the source of what I'm going to share now is the AMFI's website. If you are a learner, you can visit the AMFI's website. There are 4 broad 7 hybrid categories. Conservative hybrid fund, which has equity investments up to 25% of the total. And then the rest can be debt instruments or fixed income instruments. So up to 25% is equity, and then remaining 75%, which can go even more than 75%, is debt instruments. The second category is balanced hybrid fund, where you have equity from 40% to 60%, and the debt can be the remaining part, which can be 60% to 40%. Then there is aggressive hybrid fund, where your equity can be 65% or above, and the debt can be 35% or lesser. And this is the one where your equity taxation kicks in. Then you have dynamic asset allocation, where in an algorithmic way, a dynamic asset allocation of fixed income and equity is maintained. Equity can become 100% or 80% or 90%, and debt can also become higher, but it depends on the market situation, the P ratio of the index, etc., etc. So that's another category. This could be a very aggressive hybrid fund. Then you have multi-asset allocation, where you have at least 10% of equity, 10% of fixed income, and 10% of gold and silver. And these percentages can vary. Most of the times, the multi-asset allocation fund manager is keeping equity to 65%, so that we have a equity taxation in effect for this kind of fund. Then you have arbitrage fund, which basically capitalizes the arbitrage opportunity across the exchanges. Equity is maintained at 60% through equity-related instruments and derivatives also. Then you have equity savings fund, where you have equity and equity-related investments up to 65%. The rest can be debt and derivatives and cash. So these are 7 categories. For a beginner, I would say start with balanced hybrid fund, where you maintain an indexation benefit through the tax, because the equity allocation is in the range of 35 or 30 to 60%, 35 to 60%, and you get indexation advantage, which means your taxation becomes more effective after 3 years of holding period. So start with balanced hybrid, get into aggressive or dynamic asset allocation. And for very short-term goals, use arbitrage and equity savings and enjoy the equity taxation.
All right, that's very helpful. Thanks for taking us through that entire explanation. But could you also take us through what the taxation is like on all of these different categories? I know we touched upon it briefly, but if you could, go through the entire lot.
Yeah. So remember two numbers which segregate your equation of taxation: 35% and 65%. If your fixed income is 35% or lesser, which means your equity is 65% or above. And when I say equity, I also mean equity plus the derivatives, the futures and options, which are equity related instruments. The moment your equity is 65% or more in that fund, you get 10% tax after 1 year of holding period, provided your gains are more than 1 lakh. Up to 1 lakh, tax are exempted. Beyond a lakh, taxation is at 10%. If your equity allocation is less than 65%, but more than 35%, then you get the indexation advantage, which means after 3 years of holding that fund, you will get 20% tax on the indexed cost, which is still significantly saving of money from taxes. Then you have less than 35%. If your equity is less than 35%, there is no indexation advantage, there is no equity taxation. You get only fixed income or debt fund taxation, which is pretty much your marginal tax slab, which you pay taxes at for your fixed deposits or any other income that you earn through other sources. I hope that helps.
That is extremely helpful, Amit. Thanks a lot for taking us through all of this information and, putting it into such a compact piece for us. I'm sure that benefits our viewers. Thank you very much for joining us and taking us through that explainer on hybrid funds. For our viewers, thank you very much for tuning in. We will be back with lots more on MF Corner.